Today, the creator of Bored Apes apologizes after its latest NFT project overwhelms the Ethereum blockchain. Coinbase's CEO thinks 1 billion people could use crypto within 10 years. And what should you expect from U.S. crypto regulation? We asked Brian Brooks of BitFury. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Digital currencies traded flat today, still hovering near recent lows. By noon Eastern, Bitcoin was valued around $38,000 and Ether was worth $2,800. Meanwhile, Polygon's Matic token rose to around $1.10. Okay, on to the top stories. Bored Apes creator Yuga Labs sent Ethereum gas fees soaring with its latest NFT project. Now, gas refers to the fees paid by users to complete transactions on the Ethereum network, and users paid a total of $181 million while purchasing 55,000 other Deeds NFTs. Those are part of Yuga Labs' new Other Side metaverse project. One user paid $45,000 in gas fees for a $5,800 token, and the frenzy was so strong that other Ethereum-linked services faced slowdowns. Yuga Labs issued an apology on Twitter, well, sort of. They apologized for, quote, turning the lights off on Ethereum, but said that ApeCoin would need to migrate off the Ethereum network to properly scale. Speaking of scaling, Coinbase's top executive thinks the numbers of crypto users could hit 1 billion in 10 years. The company's CEO, Brian Armstrong, said he expects a, quote, substantial portion of GDP to happen through crypto. For comparison, around 200 million people used cryptocurrencies in 2021, according to research from Crypto.com. Finally, the SEC is doubling its efforts to protect crypto investors. Literally. The agency will add nearly twice the number of staff in its crypto unit, with around 20 new positions. Those roles include attorneys, trial lawyers, and fraud analysts. SEC Chair Gary Gensler said last year that the agency could use, quote, a lot more people to help with its effort in assessing and regulating more than 6,000 digital projects. Okay, for our main story of the day, Kate Rooney spoke to Brian Brooks while at Crypto Bahamas. Brooks was the controller of the currency in the Trump administration and is now the CEO of BitFury. He shared what might be ahead for crypto regulation in the U.S.
Brian Brooks, great to see you. Thank you so much for being here.
Thanks for having me.
So you spent time in D.C., most of your career in D.C., you're relatively new to crypto, but you were sort of a first mover. Is it safe to say you were the first person from the former administration to move into crypto?
I think that's right, and I will tell you, the idea that 4.5 years is relatively early is a good sign for crypto. So.
Yeah, exactly. A lot happens, like dog years.
Exactly.
So you've also testified in front of Congress a few times. You're very plugged in terms of what's going on there. What's your expectation for the next year or 2 years after we got the executive order? Will that have any teeth? What are you expecting for it to change, if anything?
Well, look, there's sort of good news and then ambiguous news about the executive order. So I think the good news is getting the whole of government to actually look at crypto. That's a great thing. That's never happened before. And honestly, the thinking embodied in the executive order, which is, look, there are pros and cons. It's a big thing for the Biden administration to admit that there are any pros. That is a shift in tone that's pretty significant, I think, relative to the early days. So I think there's a lot of good coming. On the other hand, you know, where the rubber meets the road is not in the white paper that these agencies issue. The rubber meets the road in terms of, are we going to see FINRA authorize crypto assets inside of broker-dealers? Are we going to see the OCC grant Circle's bank charter application? If the answer to those things is no, all the white papers in the world don't make a difference. So we need to hold these guys to a higher standard. Let's see action, not just talk.
Got it. And crypto has been one of the big themes in Congress and, like I said, some of those hearings as well. Is it bipartisan at this point, and is it a little more nuanced than that? I know you've got some thoughts on this, but I want to get your take on it.
Well, you know, it depends on what you mean by bipartisan. So if bipartisan means, are there a number of people in both parties that are on our team? The answer is yes. If the answer is there a consensus in both parties that crypto is a positive? The answer is no. Right? And the way I think about it is this. There are tech wings and financial services wings inside of both the Dems and the Republicans. And the difference between the two parties is that on the Republican team, both the tech people and the financial services people agree crypto is important. And here's why. Because on the tech side, they're worried about the concept of Twitter deplatforming dissenting views, right? But in the world of crypto, there's no CEO to deplatform you. And in financial services, there's a belief that markets and user control is better than government control. So we're aligned on my side of the aisle. On the Dem side, it's a little bit different. The technology Dems are in support of crypto for the right reasons, because it's innovation, it's early stage, because it reduces fees, it's more inclusive, it allows people to become banked who weren't. The tech people love it. But the financial services Democrats have always been skeptical of private sector finance in the first place. And for the same reason they don't like banks, they also don't like crypto, because users are making money off it. So the Dems have to align around one message or the other. Some of them support it, some don't. Republicans are pretty much aligned.
And what do you think is the biggest priority in terms of getting attention in Washington? It feels like there's a lot else going on with inflation, elections coming up. What do you think is getting the most attention, and if not, what needs the most attention at this point for crypto?
Yeah, well, there are a whole bunch of things. One is it would be great if we could stop the self-inflicted wounds, so things like the infrastructure bill, or the misguided belief that somehow ESG should shut down the Bitcoin blockchain, or that somehow Bitcoin can transition to proof of stake. These are silly ideas, and yet we keep sort of inflicting these wounds on ourselves. So we first have to stop digging the hole, okay? And then the second thing that we need to understand is the point of crypto is not to generate speculative assets. I'm always concerned still today that people talk about crypto as though, crypto tokens are price volatile and thus they're bad. It has nothing to do with anything. Crypto tokens exist as an inducement to creating networks that are going to make our lives a lot better, right? Decentralized networks are super important. Crypto tokens are the incentive for that. When we think about networks instead of tokens, that's how you'll know we've got there. But we're not there yet, and people are still focused way too much on financial schemes around the asset prices.
And what about a spot Bitcoin ETF? That has seen it. Cathie Wood's ARC application was denied. They have had some of those same concerns you mentioned about crypto being speculative and volatile. Any expectations for the SEC to approve a spot Bitcoin ETF?
Well, this is what I come back to the executive order, right? The executive order says all the right things, but where's the Bitcoin ETF, right? That's one of those rubber meets the road moments. And so the question I would have is, why is a spot Bitcoin ETF safe in Canada, but not in the US? Why is it safe in Germany, but not in the US? What is it about the United States that has caused us to be so skeptical that finance can make people richer and make their lives better that they missed in Canada? That's what I don't understand.
And the big threat that people have talked about who are on the side of crypto and want to see innovation flourish here say that it's going overseas. Is that something you've seen in your experience, companies leaving the US or deciding to build overseas instead?
Well, there's no question that there are some places that are way more friendly to entrepreneurs in the space than the US is. I would argue I don't usually think of Canada as a super libertarian tech paradise, but when Fidelity had to go and do their Bitcoin ETF in Canada, that does tell you something. What I think is happening right now is the world's shaking out into two different kinds of countries. There's the G7 kind of old economy titans of the 20th century. Those countries in the main, led by the European Central Bank, but including the US Federal Reserve and everybody else, they seem to be rolling up the drawbridge. It's like, we're good, we're harvesting, we're done building, so that's our posture. Whereas the emerging growth economies, places like Brazil, the UAE, parts of Europe, parts of Asia, they have a totally different perspective on this. And I think you're going to see an interesting alignment of those countries. It reminds me of Balaji Srinivasan's new book, The Network State, where he says, actually, it's no longer about geography. It's about where do the people live who are on your team. And for crypto, that may not be necessarily one country. It may be that set of emerging growth countries that are embracing crypto as a national priority.
Interesting, right? And we're here in the Bahamas, by the way, which has tried to make a play.
Where the world's largest exchange is based. It's not based in Silicon Valley, it's based in Nassau. What does that tell you?
Okay, that's all for today, but be sure to check out that full interview and more over at cnbc.com/cryptoworld. We'll be back again tomorrow, and we'll see you then.